Hi, we continue with the paper 1. This is the paper 12, May-June 2020 for the IGCSE accounting. I would advise that for the student whoever take the exam, before you do the question, please read the instruction carefully, because some I noticed that the student in the class, they just do it, they didn't go and read properly what is a requirement. So please be careful with all the instruction given. Okay, let's restart the class. Okay, the first one. Which are the example of the bookkeeping? Bookkeeping, the key word for the bookkeeping is a recording. There is a main job, which is from the book of prime entry to the journal. Sorry, this is the to the ledger. This is a journal. To the ledger. After that, to the trial balance. That is the main job for the bookkeeper. So here, enter detail of the check received from a customer in the cash book. Cash book is a book of prime entry. Enter detail of goods purchased on credit in the purchaser's journal. This is also one of the book of prime entry. Producing an income statement to calculate the profit. This is not the job, this is accounting job. Recording detail of the credit sales in the account of the credit customer. So this one is a ledger, T account. In the ledger, this ledger for the credit customer, we call sales ledger, which is part of the job in the ledger. So basically the answer should be 1, 2, and 4. So the answer is B. How does a trader use the information provided by the financial statement? To calculate the amount of cash drawing taken, to calculate the amount that owed by the trade receivable, to check the balance shown on the bank statement. So this one you can use bank reconciliation statement. Financial statement, basically got two in your syllabus: income statement, statement of financial position. So here to calculate the amount of cash drawing taken. So this one where you can you can take from your capital account. Capital account can help you to find drawing amount. And to calculate the amount that is owed by the trade receivable, this one in your aging account, trade receivable aging, or you go to the trade receivable account, you can find the amount owing. So the answer should be business performance, to compare the business performance over the year. Okay, next, continue. Okay, question number 3. A trader bought new feature. He paid half of the purchase price in cash and agreed to pay the balance in 2 months' time. That means half pay, half didn't pay. And this is a new feature. New feature is a non-current asset. So non-current asset, the double entry will be debit feature, credit in cash, that means credit cash. And also another half have not paid. This is the supplier name. Supplier name, this is a other payable. So you need to credit half. So in terms of asset, these two are the asset. Okay. Let's example, this is a 1,000. Pay half means that this is 1,000. This will be 500. This one will be 500. So the net impact for the asset will increase. So the increased amount. Whereas come to the supplier. Supplier credit is also meant for the increase. This is under the liability section. So liability will increase by 500. So now come to the equity. Equity is S capital, okay, which is asset minus liability. Since here is 500, Here also 500. So you get 0. There is no effect for it. Okay, now next move on. On 2nd April, Nina received a check from Zafar, a credit customer. On 12th April, the check was returned unpaid by the bank. What entry would Nina make on 12th April? Account to be debited, account to be credited. So here, check received a check from Zafar. On 12th April, the check was returned. So Nina is a seller, supplier or seller. So seller, when receive a check, he will debit bank, credit Zafar. So this is what they do. And now the check cannot be used, had to return back to Zafar. They will debit Zafar and credit the bank because bank rejected. So your double entry should be debit Zafar, credit the bank. So this is the answer for it. Okay, question 5. N is a trader. On 1st April, Cindy account in N ledger show a credit balance of 520. The following transaction took place during the April. The following transaction took place during the April. N returned goods 30 to Cindy and bought goods 210 from Cindy and pay in cash. So here, who is the one record the Cindy account in the N. So stand from N point of view, we do this recording. So Cindy in N ledger show a credit balance. So means that credit balance here 520. And during April, the transaction taken place and return goods to Cindy. That means this one is a purchases return 30. And N bought goods 210 from Cindy and pay in cash. So this double entry, we straight away debit purchases and credit cash because they pay in cash. Don't go through here. So what is the statement? The balance on. So take 520 minus 30. So the balance carried down will be 490. So this amount is N owing Cindy. N owed Cindy 490. So the answer should be A. Okay, question 6. Goods bought on credit by To Milo from Tibogo are returned before they are paid for. To Milo keep a full double entry. Where will To Milo record the return of the goods? So goods bought on credit by To Milo. To Milo is a buyer. So buyer, when buy, they will debit purchases. Okay. But now To Milo return the goods. Buyer is related to the purchases. So now goods return, it will be the purchases return. So where we're going to record it, this purchases return account. This is account. So it will record under general ledger. Whereas Tibogo is a supplier. Supplier will record under the purchases ledger. So these two ledger will get involved. So answer should be C. Next, let's move on. Dave supplied goods to Peter on credit. On 1st April, Peter owed Dave 440. Dave sent or received the following document in April. So April 7, invoice 330, check. Okay, what was the closing balance on the statement? So statement, who will prepare the statement? Dave supplied goods to Peter. So Dave will prepare the statement of account. And on credit, Peter owed. So that means on this date, 440. So this is a debit. Balance brought down. This is a statement format. Invoice, that means sales. Okay. This is a debit, this is a credit. So here, sales will appear in here. So add into here. And then these two, debit note, credit note. Debit note is issued by Peter to Dave to request the deduction on the goods returned. But accounting-wise, this one not taken in. We only take the document issued by Dave for the recording. So this is a sales return for the 15, and this one is 50. So what is the balance? So take this plus this minus 50. So we will get 440 minus 306 minus 50. So we get 7. Is there any payment? Oh, sorry, here. There is one payment which I miss out. So in this case, in here, we have to add in bank, okay, 429, and one more 11. This is a discount allowed. So have to record discount allowed as well. So the net amount will be these two net off, and this one become 310. So the amount should be 310. So let's move on. A business sold goods with a list price of 50 each. Trade discount for more than 20 items, bought 10%. Cash discount if customer pay within 30 days. How much was received in full settlement from a customer who bought 25 items pay after, okay, this one, keyword, pay after 35 days. That means this one, no more, not entitled. So the customer only entitled this trade discount. So trade discount, how much? So this one, a list price 50 each. He bought 25. So we had to take 25 times 50. After that, this is 10%. That means it's a 90% we have to pay. So the amount will be 25 times 50 times. Okay. So we need to pay 1125. So this is the amount that recorded in the accounting. Because it's not entitled the cash discount, so this is the amount I had to pay. Okay, question 9. Paul rent premise from John and pay the rent by credit transfer. The moment credit transfer is a bank. Okay, how would John record this? Paul rent premise from John. So John will get the rent receivable. Rent receivable is an income account. So income is in the credit side. So how would John record this transaction? This is a bank credit transfer. John received money, then credit rent receivable account. So 9 should be A. Okay, question 10. Sita discovered that 1,000 received from the sales of picture has been entered in the sales account. This is a non-current asset disposal. So the double entry for disposal, this value should be debit bank, credit disposal account. But make a mistake, this one not recorded, we go and put in the sales. So how to correct this error? So we have to reverse the sales, debit sales, credit disposal. So what is which one here? The answer should be C. Okay, now next move on. Question 11. The total of a trial balance did not agree and 200 was debited to a suspend account. The checking the book was found that 2 errors has been made. A sales invoice for 700 has been recorded in the sales journal. Okay, so this sales invoice amount and then has been recorded. This one, sales journal overstated by 70. The sales journal has been totally incorrect. Now, the total of the trial balance did not agree. So it means that this is a trial balance, debit and credit, and 200 was debited to the suspend. So in the suspend account, we put 200 in order to balance it off. Okay, now next is that found that these two error made, which is the sales invoice has been overstated, had wrongly recorded. So this effect affecting the sales account and also the trade receivable account, because this is a original entry. The sales journal has been totally incorrect. So that means the bottom line for the journal also wrong. So what was the error made in the total in the sales journal? So since that this one short to debit short 200, credit extra 200. So this is the credit extra 200. So what happened is that original entry is no effect. This is the original entry, no effect on trial balance because sales extra 70, trade receivable also extra 70. There is no effect. So take note, this entry will not affect the trial balance. So in this case, since that this is no effect, only affected by the sales journal, means that our sales journal in here, this is our sales journal amount, sales account, total bottom line. This one is cause the effect on this 200. So here credit means that sales overstate by 200. So the answer should be B. There are 6 errors which is not affecting the trial balance. So one of it is that original entry. Okay, question 12. The income statement of a business show a loss for the year 16,000. On checking, the following error were found. No adjustment has been made for the insurance prepaid. So we have to adjust it, debit, other, receivable, and credit insurance. This is adjustment to be made. No entry had been made for the bank charge. So we have to debit, bank charge, credit, bank. Okay, let's see what's the question about. What was the correct loss for the year? The loss is 16,000. 16,000 loss. And this credit will increase the profit. So increase the profit. And then this one debit will decrease the profit. So take this 2 minus this one. So 16,000 plus 620 minus 480. So we get 1614. So this is a loss for the year. Corrected for losses. Okay, question 13. What will be the result in the cash book balance being lower than the balance show? Okay, cash book lower than the bank statement. A check received from a customer was not recorded in the bank statement. So bank statement not recorded, it means cash book have more money than the bank statement. Okay, so this one is uncredited amount. A customer check dishonored by the bank appear only on the bank statement. So this one, cash book has more than the bank statement because bank statement has deducted. And this one have to adjust the updating the cash book. Payment by a customer directly into the bank was not recorded in the cash book. So this by a customer, this is a customer. Customer make payment. So in this case, bank cash book has less money than the bank statement because customer make payment directly and not recorded in the cash book. So this one also have to update the cash book. And this one will be cash book less than the bank statement. Payment of insurance by standing order was not recorded in the cash book. That means this one, cash book should have more than the bank statement because bank has deducted the insurance, but cash book has not deducted. So this is also have to update the cash book. So in this case, less than the bank statement. This one should be the answer for the C. Okay, now let's move on. Question 14. Tembi is preparing her sales ledger control account. She need to know the total goods which has been returned by the customer, the amount owed by the credit customer which has been written off as irrecoverable. Where can she obtain the information? The goods returned by this is a sales return. Sales return, where is the book of prime entry? Book of prime entry for the sales return. So we can get from the sales return journal. The amount owed by credit customer which had been written off as an irrecoverable debt. Irrecoverable debt, we go through the general journal for the adjustment. So goods return, it will be the sales return journal, not the account. Okay, take notes. It's a book of prime entry. Source document is from the book of prime entry. So sales return journal, not the account. And then irrecoverable is general journal. So the answer should be donkey. Next question. 15. The following payment were made when a new machine was purchased. Cost of machine 32,000. Okay. And then charge for delivery the machine. This is when deliver the machine in, they charge the transport cost. Insurance is a recurring. Every year you have to pay insurance. Wages of the employee installation cost is one part of the capital expenditure. How much was the capital expenditure? So these three items are the capital expenditure. So take 32,000 plus 1,008 plus 1,003. So the answer should be 35,000. Okay, next move on. 16. A non-current asset was depreciated at the end of first year of ownership using straight line. So straight line, using this information means that the formula will be the cost minus residual value divided by the year. So the answer will be 20,000 minus 4,000 divided by 4 should be 4,000. So this is a depreciation under the straight line method. It was then found that the reducing balance method at 30% per annum should has been used. So in this case, we change it. The formula will be the cost for reducing balance, cost minus the provision for depreciation, and then times the percentage. But because this asset is a first year, so the provision is 0 times 30% will be 6,000. So take the two differences. This is lower, this is higher. What was the effect on the profit of the correcting? So when you adjust these two, the profit will decrease by 2,000 because this is higher, this is lesser. So the profit should be decreased by 2,000. Okay. Question 17. Easier purchase a motor vehicle cost 8,000 on 1st Jan is depreciate 40%, the reducing balance. So this is the first year. This is the second year. Okay, the financial year end 31st December. So first year is 2018, second year is 2019. So which journal entry record for the year ended? So in this case, we need to calculate 8,000 times 40%, which is 3,002. So this 3,002 is for the 2018 financial year. But the question asking 2019, so we have to take 8,000 minus 3,002 times 40%. So this is a reducing balance method. 8,000 minus 3,002 times 40%. So which is 1920. So this is the entry we should make. So the depreciation double entry must be debit income statement, credit provision for depreciation. This is a standard double entry, like a formula that you need to memorize. Okay, now next move on. 18. Alice's financial year ended on 31st December. The balance on her book on 1st January include the following: commission receivable, rent receivable. So this one is the debit, both also income account. But this balance worked out is debit, that means this is a current asset, this is a current liability. This is current asset, this is current liability. So what do this balance represent? So commission receivable is an asset, that means it's an income outstanding. And then this one is an income prepaid. Income prepaid is a liability. So the answer should be B. Question 19. Annual rental income due from Kumar, a tenant, is 3,600. At the start of the year, Kumar prepaid rent of 900. Annual rent income due from Kumar. At the end, he owed 2 months. How much rent was received from? Okay, we take the rent received account. Annual rent income due from Kumar, a tenant, is 360. That means income statement 360. Debit rent received, credit income statement. And then at the start of the year, Kumar has prepaid rent 900. When we have prepaid rent, that means this is a liability. Income prepaid is a liability. End of the year, he owed 2 months rent. So end of the year, owed 2 months rent. So how to calculate these 2 months? Take 3,006 divided by 12 times 2. So we get 3,600 divided 12 times 2. So we get 600 here. So the question is how much rent was received? Bank amount is how much? So we take 3,006 minus this one, minus this one. 3,006 minus 600 minus 900. So we get 2,001. So the answer should be 2,001. So the answer should be A. Okay. Now let's continue. Question 20. Joe inventory on 31st December 2019 was valued at 4,800. It was discovered that goods cost 1,000 has not been included. Goods cost 1,170 has been included at a net realizable value 210. Okay, what was the effect of the incorrect inventory valuation? So this one not been included, that means we had to plus it. Okay, but this one, goods cost 100 has been included at, so this is overstate. Closing inventory overstate by 210 minus 170. This one is overstate by 40. So we had to reduce it. We had to reduce, we had to minus. What was the effect of the incorrect inventory valuation? They didn't ask for the adjustment. They want to know what is the effect. So this one, goods cost has not been included. So what is the effect? So we don't use plus or minus, make you confused. I explain it. Okay. So goods not included. Closing inventory understate. When closing inventory understate, cost of sales overstate. Cost of sales overstate, gross profit understate. Gross profit understate, profit will be understate. Where else come to this one? This is the overstate. Closing inventory overstate, cost of sales understate, and then gross profit will be overstate, profit will be overstate. So there is a direction on the effect. So the profit for the year, this is profit for the year. So the differences is, this one is 40, two differences. So understate 100, overstate 40. So the different net is an understate by 60. So understate by 60. And then next is that inventory. Inventory understate 100, overstate 40. At the end also understate by 60. The equity, profit understate, equity will be understate because this is directly linked to the equity. So this should be understate. So the answer should be donkey. Now let's continue. The owner of a business took goods for his own use but forgot to make any adjustment. What was the effect of this error? So the adjustment for the took goods should be debit purchases, credit, the goods should be debit drawing, credit purchases. But we forgot to do it, so no adjustment for this double entry. So when this is not adjusted, purchases overstate. Purchases overstate, cost of sales overstate. Cost of sales overstate, gross profit understate. Gross profit understate. Profit will be understate. So now here, let's see what is the info. Profit for the year, understate, understate. Capital employed. Okay, capital employed, the component for it will be the capital plus non-current liability. So this capital is opening capital plus profit minus drawing. So this is the equation for the capital. So now we have that profit understate, this one understate, but this one drawing also forgotten to do. So this one also understate, understate. Both understate, let's say understate by 500. So this one also understate by 500. So 1 plus 1 minus become 0. So there is no effect. So the answer should be C. Okay, now let's continue. Okay, Ranjit and Suni form a partnership on 1st Jan, but did not prepare partnership agreement. So no partnership agreement, it means that everything don't have except interest on loan is 5%. So capital introduced during the year ended drawing share of work. They decided to draw up a partnership agreement for future year. Which item would be more beneficial to the Ranjit? So Ranjit have more capital. So interest on capital, he will earn more. Interest on drawing, this one he take more, so this is not good for him. Limit on annual drawing, this is also not good for him. Share of work, both same, that means partner salary should get the same. So there is no difference to each of them. So the answer should be A. Question next. Okay, question 23. Harry and Jane are in partnership. The following information relate to Harry. The opening credit balance. Okay, current account. This is a current account for Harry, which is credit balance is 28,200. And this is a salary related to Harry. Salary is in here, 8,000. And drawing is in here, 2008. Share of the profit in here, 4006. What was the closing balance? So the closing balance will be balance carried out. So take the credit minus the debit, 28200 plus 8000 plus 4006 minus. Okay, so the answer should be 38,000. So the answer should be B. Okay, now let's continue. 24. The statement of financial position of X Limited at 31st December 2018 include the following. Profit for the year 31st December 2019 was 42,000 and dividend pay total is 10,000. What was the total equity at 31st December 2019? So this is end year. So beginning year will be 1st January 2019. So profit for the year. Okay, let me see what is the information given. Profit for the year, 42. Dividend paid, 10. What is the total equity? Okay, total equity will be these three items. This is total equity. This is nothing to do. So this total opening balance brought down, total equity is 40 plus 8 plus 65. So which is 11300. And then profit for the year is 42,000. And dividend pay is 10,000. So we take plus 42 minus 10. So the answer is 145. So let's continue. This is under the non-current liability. Okay, now let's continue. Okay, question 25. Which is a feature of debenture? Debenture is a long-term liability of a company, carry a fixed rate of interest, no voting right, on liquidation are paid back after, this is before the shareholder. So the answer should be A. Okay, question 26. Which cost is part of the prime cost for a manufacturing business? So manufacturing business prime cost, carriage inward is one of it. Carriage outward is a fact under the income statement expenses. Okay, this is expenses. Factory rent, this is a factory overhead. Factory supervisor, also factory overhead. So in this case, answer should be A. 27. A manufacturing business provide the following information. Prime cost, factory overhead, opening. What was the factory cost of production? Prime cost plus factory overhead cost plus opening, work in progress plus. This one had to minus closing. So take 3 plus and minus 3, 236 plus 42 plus 8 minus 6, 280,000. So the answer should be donkey. 28. A trader provide the following information: trade receivable, beginning of the year, end of the year, cash received, irrecoverable debt written off, discount. So we open a simple T account for the trade receivable. Balance brought down, 5,000 in here. End of the year is a balance carried down, is in here. Cash received from trade receivable, this is a bank amount. And irrecoverable debt written off, this is an irrecoverable debt. Discount allowed is in the credit side. So to find the credit sales, take the total credit minus the debit, 5,000. So the answer is 38585. So the answer should be this one, donkey. Okay, now let's move on. Golden provide the following information: revenue, opening inventory, Closing inventory, markup. Gordon took goods 7,000 for his own use. So revenue 90,000. So they say that what was the purchases? So I open a simple income statement. Okay, revenue 90,000. Okay, I put into the second column 90,000 less cost of sales. Cost of sales, opening inventory, purchases, closing inventory. Opening is 8,000, closing is 2,000. So this is to minus. And markup, which is a gross profit, markup is 50%. Markup is over the cost of sales. Mean cost of sales 100, this is 150,000. So we want to find the purchases, this amount. So find this one first. Okay, so take this, how we're going to find this amount? We can take 90,000, this one, divided by 150 times 100. Mathematical concept apply here. 90,000 divide 150 times 100. So we get 60,000. So this is 60,000. So from this one, this is a cost of sales. Cost of sales is opening inventory plus purchases minus closing inventory. Want to find the purchases, we take the cost of sales minus opening inventory plus closing inventory. So which is this one, 60,000 minus opening 8,000 plus closing 2,000. So 60 plus 8 minus 60 minus 8 plus 2. So we get 54,000. So this one should be 54,029. Wait, let me see. Why is my mistake? Oh, sorry. Here, one more item. They say that Gordon took goods 7,000 for his own use. In this case, in here, we have to minus drawing. So there is one more item should be in here. So this minus into here, minus drawing. Move it to here, become plus drawing. So we have to plus another drawing is 7,000. So 7,000 plus 54,000. So the answer should be 61,000. So answer this should be C. Sorry, it should be donkey. Now next move on. Question 30. Sabilo liquid asset test ratio was higher on 1st January 2019 than it was on the 31st. What could has caused this? Liquid asset is a current asset minus inventory to the current liability. So was higher on, that means this is beginning year, this is end of the year. So beginning year, better position. So what could be the cause of this? So the possible is current asset, talk about the higher in this. Maybe this one is more, this one is less. That is the cost, this one has higher. So here, which one can give this situation? Bank overdraft decrease. So this one can cause the, when this one is lower, this end year should be better. So this one cannot be, because now this is higher than it was on. That means end of the year is lower. So when this one is current asset test ratio is lower, this one bank overdraft decrease cannot be the answer. Inventory decrease. When inventory decrease, this one not related because they are not included inventory. Other payable decrease. When the other payable decrease, they will have the same impact because both also current liability. So this one cannot be. Trade receivable decrease. When trade receivable decrease, this one will decrease, cause the end year decrease. So the answer should be donkey. Okay, 31. The following ratio has been calculated as follows. Profit margin, ROCE. So year 2 is better, but year 1, this one is better. So what explains this change? Drawing has increased by more than profit for the year. What is a ROC formula? Profit before interest over the capital employed, capital plus non-current liability. So this one is drop. When this one is dropped, that means this one drop, this one increase, can cause this one drop. Whereas this one profit margin increase, that means this profit margin is a profit over revenue. So this profit increase, this one increase more, this one more than this one, because revenue increase, this one is the impact on the revenue minus cost of sales minus expenses. So this one must increase. So this one follow the ratio. So this one decrease, this decrease. Drawing has increased by more than the profit for the year. So this one, when the drawing increase more than the profit, then the capital, this effect, capital will decrease. Okay, next. Gross profit has increased, but profit for the year has decreased. So this one, if this one increase, profit should be increased unless the expenses is more. This one, the decrease caused by the expenses. Okay. Profit for the year has increased and capital has been introduced. Capital introduced is you will increase the capital. When capital increase, profit increase, this one increase, but this increase will be more than this one. Okay. Profit for the year has increased and a long-term loan has been repaid. When this long-term loan repaid, non-current liability should be decreased. When this decrease, this one ROC should be increased. So this direction should be not correct. So in this case, this profit increase caused this one increase. And then capital has introduced additional, this one additional increase, but this increase also, but this increase will be lesser than this amount. So this one should be the answer. Okay, now let's move on. 32. Which external party were interested? So external party, this is all the external party except this one. This is an internal party. So which external interested with the accounting ratio of the business? So government, they may have interested when come to this one because they want to know the economy as an economy prediction. Okay, the growth of the economy. Investor also, they were interested with the company performance because they want to do the investment. Tax authority. Tax authority basically is that like a government, they want to collect the tax collection. So this is their interest party. But external party will be interested in the accounting ratio. Accounting ratio more to analysis. Investor, they will do the analysis a lot in order to see whether should invest or not to invest. At the end of the financial year, a company did not account for unused stationery value 50. Which accounting principle did company apply? Why they didn't? Unused means that's inventory. Why they didn't adjust and put into the inventory? In most of the company, stationery, they will not because that this 50 is very immaterial. So materiality is the one cost that they didn't adjust unused inventory. Okay, here matching is talking about a cost incurred matched to the revenue earned. Money measurement talking about the skill, talking about the recording in the accounting based on the monetary term. Prudence is to avoid the profit and the asset overstated. Okay, question 34. A trader wrote off a balance on the credit customer account as irrecoverable. Which account principle was applied? Under irrecoverable topic, there are two concept, matching and the prudence. So which one that using in here only appear prudent? So the answer should be prudent. Business entity talking about separate record for the owner and the businesses. Okay, consistency talking about the method or the rate used must be consistent throughout the period. Question 35. A limited company apply the accounting objective of comparability. This is comparability. So what is the effect of this on the interested party? They can be sure that the information in financial statement is up to date. They can identify the similarity with the financial statement of other business. They can understand the financial statement easily. They can use the financial statement in the decision making. So here what we have for it, understandability. This is under the objective understandability. Okay, whereas this one, decision making, this is more relevant under the relevant objective. Whereas they can be sure the information is up to date. This is more about the reliability. Okay, so the answer should be boy. So that is for the paper that I discussed for today.